It's a pleasure to be here to represent our supply chain analysis of SEXO Bank using a score model. SEXO Bank is not just another financial institution, it's a pioneer in digital banking, specifically designed to serve small and medium-sized enterprises, SMEs, and underserved communication in emerging markets across Asia, Africa, and Latin America. What sets SEXO apart is its commitment to innovation, leveraging cutting-edge technology like blockchain, artificial intelligence, and mobile banking to provide faster, cheaper, and more inclusive financial services compared to traditional banks. But with great innovation comes great responsibility, especially when it comes to managing the supply chain that support these services. Today, we will explore how SEXO applies to supply chain operation references model to optimize its operation. Company overview. SEXO Bank operates at the intersection of finance and technology, serving as a lifeline of SMEs and individuals who have historically been excluded from traditional banking system. Uh, and the SEXO Bank features are like digital first approach, unlike conversational banks that rely on brick and mortar branches. SEXO delivers most of its services through mobile apps, USSD codes, and online platforms, making banking accessible even in remote areas. Blockchain technology. The bank uses blockchain to facilitate secure and transparent cross-border payment, reducing transactions times from day to minute and slashing fees by up to 50%. AI-driven credit scoring. By analyzing over 100 data points, including cash flow, story, social media activity, and on utility payments, SEXO has approved loans in just 15 minutes, a process that typically takes weeks at traditional banks. Focus on underserved markets. Sector targeted regions where banking penetration is low, such as rural areas in Nigeria, Indonesia, and Colombia, providing these communities with their first format financial services. Competitive advantage. Speed. Loan approval in minutes, not weeks. Affordability. Lower fees due to reduced overhead costs. Inclusivity. Reaching customer whose lack access to traditional banking. However, these innovative models also introduce unique challenges, particularly in supply chain management and cybersecurity. To understand how SEXO addresses this challenge, we will now turn to the score model. Score model overview. This figure, the supply chain operations reference model is a globally recognized framework for evaluating and optimizing supply chain performance. Developed by the Supply Chain Council, it breaks down supply chain processes in six key components, and they are like a plan, developing strategies to balance demand and supply while managing risks. Source. Producing the necessary resources such as funds and technology partnerships. Make. Executing core operation for SEXO Bank. This includes loan processing and digital service delivery. Deliver. Distributing services to customer through multiple channels like mobile apps, USSD. Return. Handling exceptions like fraud, disputes, or service reversals. In our supporting infrastructures, including IT systems and government framework. Why is score relevant to SEXO Bank? Efficiency. The model helps SEXO streamline processes, reducing delays and costs. Risk management. It provides a structured approach to identifying and mitigating vulnerabilities such as cybersecurity and threats. Scalability. As SEXO expands into new markets, the score model ensures its supply chain can grow without compromising performance. Applying SEXO score to SEXO Bank. Uh, How SEXO Bank operationalized the score model accelerated supply chain plan. SEXO uses predictive analytics to forecast loan demand. For example, in agricultural regions, demanding spikes during planting and harvest seasons. The bank adjusts its liquidity and risk model accordingly. Risk governance is dynamic during economic downturns. SEXO tightens credit thresholds to result defaults. Source: the bank partners with fintech companies for cloud infrastructures and blockchain networks. However, these partnerships introduce risks such as third-party details breaches. Make this is where SEXO all-driven loan processing signs a small business owner can apply for the loan via the mobile app, and the system evaluates their credit worthiness in 15 minutes using alternative data. For example, delivery story, social media activity. Automated repayment are triggered when the business receives payment for goods, ensuring timely collections without manual follow-up. Deliver. Sexo adopts an omni-channel approach. Urban customers using features with instant invoicing and blockchain payments. Rural customers rely on USSD and SMS banking, which works on basic phones, which inclusive this channel is vulnerable to fraud. Last one is return. The bank has system to detect and resolve fraudulent transactions such as SMS hijacking. Enable. SEXO invests in block audits all fraud detection and zero trust cybersecurity to support its operation. While this system is robust, it's not without challenge. Let's dive deeper into the key processes and their pain points. Plan. Demand prediction and risk governance. So AI analyzes historical transaction data, seasonal trends, and microeconomic indicators to predict loans demand. For instance, in Kenya, loan applications rise by 40% before the rainy season as farmers prepare for planting. Risk governance is proactive. If the AI detects rising default risks, example of recessions, it automatically adjusts credit policies, such as requiring higher collateral for certain sectors. To make AI-driven loan processing, the bank AI evaluates 100 plus certain sectors. Make AI-driven loan processing, the bank AI evaluates 100 plus data points to assess credit worthiness. For example, a retailer cash flow history from mobile money transactions, their social media activity, utility payment records to gauge financial stability. Automated repayment are integrated with e-commerce platforms where when a business receives payment for goods, loan replacement is deducted. Loans deducted automatically, reducing defaults by 25%. Deliver omni-channel banking. Urban SMEs enjoy a seamless app experience with features like instant invoicing, blockchain-powered cross-border payments. Example: Nigerian business paying a supplier in India. A rural customer uses USSD SMS banking for basics like balance check and transfer. While this ensures inclusivity, it also the bank's SIL seals due to lack of encryptions, making it easy for fraud to intercept messages. Low digital literacy, leaving users vulnerable to scam like your account is frozen, reply with your PIN. These vulnerabilities bring us to SEXO's biggest supply chain challenge: cyber security risks. Slide 5. Supply chain challenges, cyber security risks. Subservience reliance on digital channels exposes it to three major threats. Third-party breaches. The bank depends on cloud providers and fintech partners for critical infrastructures. A single weak API could leak millions of customer records. Example in 2024, a breach at the fintech partner exposed 5 lakh users' data, leading to $20 million in fines and reputational damage. Two, to smart contract hacks. SEXO uses a blockchain smart contract for trade finance. A coding flaw could let hackers divert funds. Case history in 2023, DeFi protocols lost $300 million due to the smart contract bug. SEXO contracts are similarly at risk if not audited regularly. USSD SMS hijacking. Rural users are targeted while sport messages. Example: your account has been compromised and you need to send PIN to reset. Impact in Nigeria's SMS fraud rose by 65% in the 2023, costing bank $500 million annually. Fish diagram. The fish diagram helps us visualize the root cause of delays in SEXO bank supply chain. Let's break it down by category. Technology. Legacy systems slow loans approvals by 30%. USSD latency due to outdated telecom infrastructure in rural areas. Process manual KYC checks for rural customers added 2+ days to onboarding. Fraud investigations takes up to 72 hours, dealing resolutions. Free people. Understaffed call centers during peak hours lead to hour-long wait times. Limited cybersecurity training for rural agents. Solution pathways. Automatic KYC using AI to cut onboarding to 10 minutes. Upgrade SSD infrastructures with telecom partners. Upgrade SSD infrastructure with telecom partners. Implement zero trust security to reduce fine investigations by 50%. Proposed OM solutions. To imitate XXO's challenges, we propose three operational management solutions: zero trust configurations, micro segments APIs, isolate loan processing APIs from customers' data APIs to limit breach spread. Role-based across rural agents can only approve loans up to $10 million. Higher amounts then require HQ approval. Two, blockchain security measures. Quarterly smart control adults films like sorting to catch vulnerabilities. Multi-signature wallets requires 3 by 5 approvals for transaction over $50K to prevent unauthorized transfers. All for defense. Behavior biometrics detect anomalies from on new devices. Real-time SMS alerts. Conclusion and recommendation. In closing, SEXO Bank supply chain is a double-edged sword. Its digital innovations drive growth, but also introduce vulnerabilities to secure its future. We recommend out of zero trust immediately to isolate third-party risks, conduct quarterly blockchain audits. Prevention is cheaper than breaches. Deploy behavior biometrics for USSD users to combat frauds. SEXO can protect its customers, comply with regulations, and sustain its competitive edge. Thank you.